We're jumping straight into SELLAS Life Sciences today. Everyone is watching the price action, but the real story is the count to 80.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And if you're looking at the charts this week, you know exactly why we're talking about this company.
Oh, yeah.
We are seeing massive, massive volatility. The stock recently just smashed through that $5 level.
For the first time in, what, 3 years?
Over 3 years, we're talking surges of like 190% over the last 30 days alone. It's wild.
The volume is huge. You have this collision happening, right? Retail traders chasing momentum, and then you have institutional money that seems to be, I don't know, positioning for something bigger.
Right, and the hype is loud. It feels like everyone is trying to pile into the same trade at the same time. But before we get swept away, if you want to stay ahead of these kinds of moves, make sure you subscribe and hit that like button. This is where we try to simplify the pretty complex world of biotech catalysts, and you really don't want to miss what's coming next.
It is definitely a battleground stock.
Okay, so let's unpack this. Because the chart is going vertical, but the thing that's actually driving the engine under the hood is a number.
A single number.
72 out of 80. That's the count. So for anyone who isn't a biotech specialist, explain why the number 80 is practically magical here.
Right. So this is what makes event-driven investing so unique and honestly so nerve-wracking. We're talking about the Regal trial.
Their big one, phase 3.
It's their pivotal study for the lead drug, GPS. Now, usually a company says, oh, we'll have data in Q4 or something like that.
But date on a calendar.
Exactly. But Regal is different. It's an event-driven survival trial. The event they are counting is, well, unfortunately, it's a death.
That's a grim reality to wrap your head around. The clock isn't ticking seconds, it's ticking lives.
Precisely. It's the cold arithmetic of oncology. The trial design, the statistics, they require 80 of these events. 80 deaths to happen among the patients.
And only then can they run the numbers.
Once they hit 80, they can unlock the data, unblind the study, and see if the people on the drug live longer than the people who weren't.
So that sets up this incredibly tense situation. We're sitting at 72 events as of, late December 2025?
That was the last update, yeah.
So we're just waiting for 8 more data points, 8 more tragedies, really, to flip the card over and see what this company is actually worth.
It is the ultimate event-driven trade. The timeline is dictated by biology, not a calendar.
And that biological timeline brings us right to the bull case, doesn't it?
It does. Because paradoxically, the fact that we're still waiting, that's actually the core argument for why the stock is ripping higher right now.
Yeah, let's dig into that, the good delay theory. It feels counterintuitive. Usually a delay is bad, you missed a deadline, you're burning cash.
Right.
But here, the bulls are popping champagne because the trial is taking longer than expected. How does that work?
It's kind of reading the tea leaves 101 for oncology. Think about it like this. You have a statistical model that predicts how fast these patients who are very sick should, pass away.
Okay.
If the drug wasn't working at all or the placebo group was doing even better, the deaths would likely be piling up faster. You'd have hit that number 80 months ago.
So a slower event rate implies that the patients in the trial as a whole are living longer than the math said they should.
Correct. And since the study is blinded, we don't know which patients are living longer. Is it the drug group or the placebo group?
But we have a clue, a massive clue.
We do. Back in August 2025, the Independent Data Monitoring Committee, the IDMC, they looked at the unblinded data.
And let's be clear. Who are these guys? They're not on the payroll, right?
Great question. No, totally independent. A group of doctors and statisticians, they're the only ones allowed to peek behind the curtain.
So they're the referees. Their job is patient safety.
That's it. If a drug is hurting people, they kill the trial. If it's useless, what they call futile, they stop it then too. It's unethical to keep going.
So what did the referees say in August?
They said continue without modification. That is a massive vote of confidence.
Meaning no safety red flags and crucially no obvious signs that it's useless.
Right. So if patients are living longer and the independent refs say keep going, well, the inference the bulls are making is that the drug, GPS, is the reason they're surviving.
Okay, that logic holds up. But let's talk about the drug itself, GPS. It targets the WT1 antigen. Assume I failed high school biology? What is that?
So think of a cancer cell like a soldier in enemy camouflage. Your immune system usually just walks right past it.
Doesn't recognize it.
Right. But this specific type of leukemia, acute myeloid leukemia or AML, it often waves a specific flag. That flag is the WT1 antigen. It's a protein that shouldn't be there in high amounts.
So GPS is like a spotter pointing out that flag to the immune system.
It's more like a training manual.
Yeah.
It's a vaccine-like mechanism that trains your T cells, the hunter killers, to recognize that WT1 marker and destroy anything with it.
Okay, but here's the key thing, right? This isn't for patients who are actively sick. It's a maintenance therapy.
That is the crucial distinction. You don't use it when the cancer is raging. The immune system is just overwhelmed at that point.
It's like trying to put out a forest fire with a garden hose.
Exactly. GPS is designed for patients who've already gone through chemo, they're in remission, and now they're just waiting.
Waiting for the cancer to come back.
Which it does, at a terrifyingly high rate in AML. GPS is trying to patrol the body during that quiet period, hunt down any leftover cells before they can restart the fire.
So it's filling a huge unmet need. There's not much else out there for this.
Very little.
Okay, so I get the excitement, but I have to push back on the single point of failure risk. If Regal fails, is this company a zero, or is there something else in the pipeline?
That is absolutely the right question to ask. A lot of people get fixated on GPS, but we have to talk about the second pillar.
SLS-09.
SLS-009. A completely different drug, a different mechanism.
It's a CDK9 inhibitor. I see inhibitor. I assume it stops something. What's CDK9?
Imagine the cancer cell has a printing press that's running nonstop, printing out instructions, genes that it needs to survive and grow. CDK9 is the on switch for that printing press.
So you inhibit CDK9, you shut down the press.
You shut it down. The cell basically runs out of instructions and dies.
But I've heard of these before. Historically, CDK9 inhibitors have been pretty toxic.
You're spot on. The problem was always selectivity. The old ones would turn off the printing press in healthy cells too. But SLS-009 seems to be highly selective, and the phase 2 data was, well, it was impressive.
What are we talking
A
about?
46% overall response rate in relapsed or refractory AML.
Okay, let's put that in context. That patient group is a nightmare to treat. A 46% response rate is turning a lot of heads.
It is exceptional. You're usually happy with single digits there. In some specific patient groups, it was even higher, like 58%. So no, the company isn't a zero if GPS fails. SLS-009 provides a real valuation floor.
Speaking of floors, let's talk money. Usually a biotech rips 180%, and I'm just waiting for the offering to drop and crush the share price.
Dilution, yeah.
But they've already been busy.
They have. They raised cash recently through warrant exercises. Pro forma, they're sitting on roughly $73 million in liquidity. Their current ratio is about 8.3, which is incredibly healthy for a company like this.
So they have the runway to actually get to the data readout. They aren't desperate for cash tomorrow.
That's a huge advantage. And it's not just retail traders buying in. We saw BlackRock is holding a 5.4% stake.
That's a big signal. Big money doesn't usually make those kinds of bets unless they see a real edge.
Right. And the chart is reflecting that. You saw the golden cross, the 50-day moving average crossing above the 200-day.
The classic momentum signal.
It tells the algorithms the tide has turned. And that $4.50 to $5 range that used to be a ceiling, now it's looking like the floor where buyers are reloading.
So you have the science, the good delay, the cash, the technicals. It sounds perfect.
It does.
And that scares me. Because in biotech, perfect setups can evaporate in a single morning. We have to take the rose-colored glasses off.
Well,
Let's pivot to the bear case.
absolutely.
As much as we love the slower event rate theory, we are staring at a massive, massive binary cliff.
This is the single biggest risk. We can talk about second pillars all day, but if the Regal trial misses its endpoint, if there's no statistical difference in survival, this stock doesn't dip, it crashes.
And the valuation right now is pricing in a win, a big win.
Almost entirely.
I was looking at the price-to-book ratio. It's sitting around 15, 16 times. That seems rich.
It's a hefty premium. The market is paying for success before the card is even flipped over.
Which creates a scenario where even good news could be bad news.
That's the danger of valuation compression. If the data comes out and it's just,
Yeah.
okay, maybe extends life by 2 months, the FDA might approve it, but the market might say, we were expecting a blockbuster, not a slight improvement.
And the stock sells off anyway because the hype was bigger than the reality.
Exactly. The expectation is set for a home run. A double isn't good enough.
And we can't ignore the financial bleed. This company is pre-revenue. The profit margins are mathematically terrifying, negative 1,460%.
It's a tough number to look at. And that cash raise we mentioned, yes, it was great for the balance sheet, but it came from warrants. That's dilution. Every time they raise money, your slice of the pie gets a little smaller.
And there's an irony here. If the trial keeps dragging on, which is great for the patients, it's actually painful for the balance sheet.
That's the execution risk. You're at the mercy of biology,
Hmm.
and you have to keep paying the bills. The clinical sites, the staff, the data monitors, that cash burn continues every single month.
So that uncertainty just breeds volatility. We're all just guessing until the blind is broken.
We're trying to read a novel by looking at the cover art. We think we know the plot, but we haven't read a single page of the actual ending.
So if you're in this trade, or thinking about it, what exactly should you be watching right now?
The absolute critical item is the magic number, the announcement of the 80th event in the Regal trial.
And since they were at 72 in late December, we are now mid-January 2026. That announcement could come any day.
Could be tomorrow, could be 3 weeks from now, but once that PR hits, the clock starts ticking for the final analysis. That's the moment of truth.
Is there anything else? I hate just waiting for one headline.
There are a few breadcrumbs. Keep an eye out for the start of the new trial for SLS-009. They're expected to kick off an 80-patient study in newly diagnosed AML this quarter.
And why does that matter?
It shows they can execute. It shows they can walk and chew gum at the same time. It keeps that second pillar story alive and proves they aren't just sitting around.
And earnings are coming up in early February.
They are. Don't look for revenue, obviously, but pay very close attention to that cash burn rate. If that number starts to spike, that liquidity runway we praised gets shorter very, very quickly.
There's also the macro factor, right? Biotech is super sensitive to interest rates.
Definitely. If we're in a risk-on environment, speculative money flows into names like this. If the market gets spooked, these are the first stocks to get dumped. You need a good market to sustain that kind of multiple.
Okay, so let's wrap this up. What's the lowdown?
SELLAS is the definition of high-stakes poker. You have a potential blockbuster on the flop. You have a chart that's broken a huge downtrend, and you have a pile of cash that buys them time.
But,
And it's a massive but. You are betting on biology. Until that 80th event is counted and the data is unblinded, it's all speculation. The market is pricing in a victory, but the results are still locked in the vault.
it's a thrill ride, no doubt. But I want to leave you with one final thought. We talked a lot about the slowing event rate, how fewer deaths is the market's favorite clue right now.
The bullish tea leaf,
Right. But in a blinded trial, silence is the loudest sound there is.
that is the haunting part.
Is the market hearing a symphony of survival? Or is it just hearing the echo of its own hope? Sometimes the most dangerous noise in the market is the one we create ourselves.
A powerful question to end on.
That's it for our look at SELLAS Life Sciences. If you enjoyed this breakdown, make sure you're subscribed so you don't miss the next move. We'll see you on the next one.